Hey everyone, welcome back to the channel. If you're new here, we break down real fundamentals, deep strategy, and honest risk reward so you actually know what you're investing in. Today, we're taking a deep dive into Citigroup, one of the biggest banks in the world, but also one of the most undervalued. The big question is Citi a sleeping giant, or is it a long-term value trap? Let's break the whole story down. Before we get into the numbers, here's the big picture. Citigroup is a massive global bank, but its stock has been stuck at low valuations for years. Recently, though, the company has been going through a huge transformation, restructuring, investing in AI, and shifting its business model. So this is more than just a banking stock. This is a turnaround story. Let's start with the fundamentals. In Q3 2025, Citi actually delivered pretty solid results. Revenue grew 9% year over year, profit jumped to around $3.8 billion, and EPS came in stronger than expected. They've also got a strong capital position, with a CET1 ratio of 13.2%. The only weak spot is returns. Their ROTCE between 8 and 9.7% isn't where top-tier banks usually operate. That's part of why the market still discounts the stock. Understanding Citigroup means understanding their business model. They have three major pillars: their services division, which handles global payments and cash management, their markets and investment banking arm, which trades and raises capital, and finally, their US consumer and wealth business. This mix gives them a lot of stability, but it also makes the company incredibly complex. One of Citi's biggest moves over the past few years is simplifying the bank. They've been exiting smaller, lower return retail markets around the world, the most notable being the sale of their Banamex stake in Mexico. The whole idea here is to cut out the noise, focus on businesses that scale, and reduce risk in messy markets. This is a major shift toward a cleaner, more efficient global footprint. This is where Citi gets surprisingly modern. They've gone all in on generative AI inside the bank. Their internal AI tools have already been used over 7 million times this year, including more than 1 million automated code reviews. That's led to massive time savings, around 100,000 hours every week. If they keep pushing this direction, it could meaningfully improve margins over the next few years. Citi is also rethinking how it approaches wealth management. Instead of running everything in-house, they partnered with BlackRock to manage around $80 billion worth of client assets. This lets Citi focus on the relationship side, where the money actually comes in, while BlackRock handles the investment side at scale. It's a smart move, and it turns their wealth division into a higher margin business. When a bank thinks its own stock is cheap, it buys it back. And that's exactly what Citi is doing. In Q3 alone, they returned more than $6 billion through dividends and buybacks. They also have approval for a massive $20 billion buyback program. This tells us that management genuinely believes the stock is undervalued. So why is this stock still cheap? Mainly because investors don't fully trust the turnaround yet. Citi trades near its tangible book value, which rarely happens with big global banks unless the market is skeptical. Analysts say the stock should be 20 to 25% higher based on intrinsic value, but the market wants to see consistent improvement before it rewards the company. Here's the bullish outlook. If Citi successfully pushes returns toward 10 or 11%, and all this restructuring plus AI adoption starts to pay off, the market could finally reprice the stock. In that case, Citi could realistically reach the 140 to 150 range. For a big bank, that would be a very strong move. The base case is more conservative. If Citi improves slowly and steadily, but doesn't knock it out of the park, the stock could still drift up to the 115 to 120 range over the next few years. Not explosive, but reliable, and supported by buybacks. And of course, the bear case. If returns stay weak, or if global uncertainty hits banks hard, Citi could stay stuck where it is, or fall back into the $80 to $95 range. That's the risk you take with a turnaround stock. sometimes the turnaround doesn't fully materialize. So overall, Citigroup is one of the most interesting value plays in the financial sector. It has real upside thanks to AI adoption, simplification, and heavy buybacks. But it also has real execution risk. If the turnaround works, investors could see a strong re-rating. If it doesn't, the stock may continue grinding sideways. Let me know in the comments what you think. Is Citigroup a hidden gem? Or is it just stuck forever? Thanks for watching, and don't forget to like, subscribe, and follow for more deep dive stock breakdowns.